South Africa is still receiving a steady stream of foreign direct investment inflows. That's according to a new PwC report, which shows that SA has attracted a net inflow every year since the global financial crisis. And that's despite facing a myriad of challenges. In 2023 specifically, the country attracted just over 96 billion rand. That's around 1.4% of GDP. PwC says South Africa has many positives for foreign investors. These include, amongst others, world-class financial services and communication industries, a deep capital market, abundant natural resources, and a certain degree of political and policy stability. Astral expects to shoot the lights out. South Africa's biggest poultry producer has forecast a jump in half-year headline earnings per share of as much as 445%. That's as the company benefits from the low base of the matching period a year ago, when its operations were severely impacted by higher stages of load shedding. Astral will release interim results on the 20th of May. Raubex expects headline earnings for the year ended December to rise as much as 25%. That's according to an updated trading statement from the Construction and Engineering Group. Initially, the firm had forecast a rise of 10% after tender activity picked up. The company will open its books on the 13th of May. Cashbuild has appointed Hanré Bester as the group's CFO. He will take up the position at the building materials retailer from July the 1st. Bester is currently the CFO of Pinnacle Micro and is a chartered accountant who completed his articles at PwC. The board says it looks forward to his contribution to the success of the business. In international news, the yen jumped sharply against its peers today after it slid past 160 to the dollar earlier in the session. This leading to speculation that Tokyo could have intervened in the currency market while the country was out for a holiday. Let's take a look at this report for more.
The yen jumped suddenly against the dollar on Monday as traders cited yen buying intervention by Japanese authorities. They're trying to stop a relentless fall in the currency to levels last seen over 3 decades ago. The yen rose sharply earlier in the day as trade sources said Japanese banks were seen selling dollars for yen. Traders had been on edge for weeks for any signs of action from Tokyo to prop up the currency. The yen has fallen 11% against the dollar so far this year. It plunged to 34-year lows even though the central bank exited from negative interest rates in a historic move last month. Currency traders have bet that despite the change, Japanese rates will remain low for some time in contrast to relatively high US interest rates. Japan's top currency diplomat Masato Kanda declined to comment when asked if authorities had intervened. Japan's Ministry of Finance was not immediately available for comment. The yen has been steadily sliding for more than 3 years and has lost more than 1/3 of its value against the dollar since the start of 2021. In real terms, the yen has been at its weakest since at least the 1970s. A weaker yen is a boost for Japanese exporters, but a headache for policymakers. It raises import costs, adds to inflationary pressure, and squeezes households. The yen fell on Friday when the Bank of Japan disappointed traders by keeping its policy settings unchanged. The central bank also offered few clues on reducing its government bond purchases. The yen has been under pressure as US interest rates have climbed and Japan's has stayed near zero. It's led investors to cash out of the yen and buy dollars for its highest yield to earn.
Now, Deutsche Bank's shares fell sharply this morning following reports of a potential 1.3 million euro liability in a long-standing lawsuit alleging underpayment in its acquisition of Postbank. Here's Anatin Devu with more.
Well, that's right, Zinati. Germany's largest bank lender, Deutsche Bank, saw a 5.5% drop in its shares today. Now, this is due to the disclosure of a potential 1.3 billion euro liability that is said to be stemming from allegations of underpayment in its acquisition of Postbank. Now, Ikram Ekechi, who is with Deutsche Welle, joins me now from Berlin. Ikram, what's the latest?
Deutsche Bank's shares indeed took a significant hit this morning during early trading. This downturn comes after the latest developments in a long-standing lawsuit that could potentially cost Germany's leading financial institution up to 1.3 billion euros. The setback arrives just after Deutsche Bank celebrated better-than-expected earnings last week, and this was an achievement that momentarily boosted its stock. However, the positive momentum has been dampened by this ongoing legal challenge, and this is a remnant of its acquisition of Postbank, which has continuously plagued the bank with issues.
Now, Ikram, do you mind recapping the story behind the lawsuit against Deutsche Bank?
Well, this lawsuit dates back 14 years to when Deutsche Bank acquired Postbank for 25 euros per share. Some Postbank shareholders felt they were underpaid, they were trying to get twice that price, and they sued. Now, Deutsche Bank strongly opposes the notion that it has underpaid, and the bank did not disclose the exact amount earmarked for any legal contingencies. However, it's known that the claims involved total about 1.3 billion euros. In late 2023, the bank also encountered significant issues with the integration of Postbank's IT systems, and this led to severe disruptions. Numerous customers were locked out of their accounts, internal workflows were heavily disrupted, and there was a notable increase in customer complaints to the regulator. And in response, Germany's financial watchdog appointed a special monitor to oversee Deutsche Bank's efforts to resolve these issues.
Well, Ikram, we of course know that Deutsche Bank, and I quote, continues to disagree strongly with any view that it underpaid. So what is their action plan on this?
Well, as for now, Deutsche Bank is bracing for a potential loss in the final round of a long-standing legal battle, as indications from the Cologne court suggest that it may find merit in some of the claims against the bank in a forthcoming ruling. Despite this, the bank expressed a strong disagreement with the plaintiff's perspective on Friday. Deutsche Bank also said that it has not fully assessed the legal nuances or the financial repercussions of the court's preliminary opinion. However, while acknowledging that its profits for the second quarter and the full year will be affected, the management remains confident that these developments will not significantly impact the bank's strategic direction or its financial objectives.
Well, let's leave it there for now. That was DW's Ikram Ekechi.